Alright guys, welcome to the third edition of the training, the third section of the training. I want you guys to please, if this is your first time, please hit on the subscribe button and that of the bell icon. The reason I would want you to hit on the subscribe button is because there's a lot of information that are coming out of this course. In order for you not to miss it, please hit on the subscribe button in order to encourage us to do more videos. And please guys, should in case it's your first time you're meeting our channels, you may just want to look underneath the description and then you will find the link for the part 1 of this training and that of the part 2 if this is your first time. Alright guys, let's stay connected. What is long and then what is short? So this is where we actually ended with our second section of the training, and then we want to just kick off from here, but then we're just going to flip through some few stuffs before we get to where we actually where we're supposed to be starting from the third edition training. And then so long shorts, it means buy, sell. And then what is bid ask? You see the difference between the word bid and ask is spread. All forex quotes include a two-way price. What does it mean? Now the bid and the ask. The bid is always lower than the ask price. So what is the bid and what is the ask? Alright, so we go to the next page. You could see over here, it's a buy at ask at the very diagram at the top. It's a buy at ask and then sell at bid. So in other words, the horizontal line you see on the very diagram underneath, horizontal line with red is actually determined to be the ask price, and then with the gray color is determined to be the bid price. Alright guys, let's flip through some few stuffs again. It says what is lot? What is lot? Spot forex is traded in lots. The standard size for a lot is 100,000 US dollars. Now there is also a mini lot size, and that is 10,000 US dollars. As you already know, currencies are measured in pips, which is the smallest increment of that currency. To take advantage of this tiny increment, you need to trade large amounts of a particular currency in order to see any significant profit or loss. Alright, let's assume we will be trading, or we will be using $100 lot size. We will now calculate some examples to see how it affects the pip value. And then just in case you're watching and then you're going through this trading and maybe looking at what has been scaled up on the screen, you feel that no, you need to be a mathematician before you'll be able to solve this. No, you could actually do this with your laptop. You could do it with your calculator. If you're a mathematician, that is fine, okay? You may just want to do it. It's very simple to calculate this. And then in order for us not to waste much time trying to talk over this for some time, you might just want to pause what you're seeing on the screen and do the calculations yourself. And then the next says how to calculate profit or loss. You see the rate you are quoted is 1.4525 stroke 1.4530. Because you're not buying US, you will be working on the 1.4530. Now going through all these things scaled up on the screen is going to be a little bit delaying, okay? But I want us to please, you may just want Steve, or better still, pause your screen and then do these calculations yourself and see how you get the pip values, okay? Please, we just flip over to the next course. This is actually the third edition, where we're supposed to be starting from the third edition, which is Forex Street Academy curriculum. And then we'll be treating on preschool, which is we're still on Forex Basic. but then we're going to be talking on fundamental and technical analysis. And then for this case, we have what is called two types of trading. These two types of trading basically explain what is called, or basically explain the values of technical and fundamental analysis. Now you cannot be powerful in forex trading. You cannot, or you may not have a strong forex trading foundation if you don't leverage on these two information. You may not be very powerful in this system of trading if you don't have knowledge about these two trades. And then there has always been a consistent debate as to which analysis is better. But to tell you the truth, you need to know a little bit of both. Now let's break each one down and then come back and put them together. Now, fundamental analysis is a way of looking at the market through economic and social political forces that affect supply and demand. In other words, you look at whose economy is doing well and whose economy sucks. Now, the idea behind this type of analysis is that if a country's economy is doing well, the country's currency will also be doing well, isn't it? Exactly. The country's currency will also be doing well. This is because the better the country's economy, the more trust other countries will have in that country's currency. Now, for example, the US dollar has been gaining strength because the US economy is gaining strength. As the economy gets better, interest rates gets higher and control the inflation, and as a result the value of dollar continues to rise or to increase. In a nutshell, this is basically what is called fundamental analysis. And then looking at the screen over here, you see fundamental analysis, and then on the left you could see a diagram over there that says good economy equal to higher currency value, and then bad economy equals to lower currency value. So what does it tell you? Now later on this course, you will learn which specific news or which specific news event drives currency prices the most. Now for now, just know that the fundamental analysis on the forex is a way of analyzing a currency through the strength of that country's economy. That is just a fact. So when you're loaded with most of these informations, it helps you to build a good and a solid forex foundation. You get a solid forex foundation and you don't make some mistakes that are not supposed to be there. But I bet you, just in case again, if you've not subscribed to our channels, please hit on the subscribe button and that of the bell icon. And if this is your first time of attending this training, of seeing this training, please look underneath the description, scroll down, there is a link for part 1 and the part 2 of this same training. Please get a full knowledge of what we are discussing. There are a lot of information that is going to come out of this, and for the next 2 to 3 months we are just going to be uploading a lot of information that will make it so powerful. Alright guys, let's stay connected and let's stay informed. I love you guys. So what is technical analysis? Technical analysis is a study of price movement. That's what we are treating right now. Is the study of price movement. In one word, technical analysis chart. The idea is that a person can look at historical price movement and based on the price action can determine at some level where the price will go. Now by looking at a chart, you can identify trend and patterns which can help you find a good trading opportunity. Now what are those charts? Now if you look at this particular chart, you will notice that in here we can see that price had troubles breaking this level. Chart allows us to visually see where a market has gone, which gives us a better idea where the market will go next. Exactly. So this is what technical analysis is all about. He said, by determining at some level where the price will go next. So now, looking at the top here, you could see that the market came from the bottom here, climbed to the top, and then at some level decided to fall down back. Now you see this arrow was actually placed before the market starts dropping. And then when the market dropped, we took a screenshot of what happened and then we posted it. We have to use it as to explain better what technical analysis is all about. Alright guys, we're supposed to be continuing this training, but then the most important thing you will ever learn in technical analysis is the trend. The trend. Many people have a saying that goes, the trend is your friend. The reason for this is that you are much more likely to make money when you can find a trend and trade in the same direction. In other words, finding a trend. Now let's take for instance a trend going from the very top down, and then you drew a trend line that moves from this very top down to this spot. Anytime you place a trade, anytime you decide to follow a particular trend, be it a downtrend or an uptrend, you are likely to be the market's friend, the forex market's friend, the chart's friend, the trend's friend. Why? They said the trend is your friend. That is only if you understand, if you have the common knowledge that it requires, and then it becomes your friend. But then if you don't, it may turn to something else. But then that's why we're trying to give you a complete knowledge on how to follow this trend and work with the trend. And then technical analysis can help you identify this trend in its earliest stage and therefore provide you with a very profitable trading opportunities. I know you're thinking to yourself, geez, I know a lot of things are running through your minds now. Yes. Now, so which type of this analysis is better? Which type of this analysis is better? The $1,000,000 question throughout your journey as an inspiring forex trader, you will find strong advocates for both fundamental and technical analysis. You will find those who argue that it is fundamental analysis alone that drives the market, and that any other thing outside from fundamental analysis does not work. We've had a lot of guys that sometimes they try arguing things of this nature, that like trying to make it as an argument, just trying to talk over it over times, and then that's as a result of one who doesn't have a complete knowledge of what he or she is talking about. Okay, now common market patterns can be found to help predict what's future price movement. It can only be found in your chart. Now do not be fooled by this one-sided extremist, persons that says technical analysis is the best, and then some other guys tells you fundamental analysis is the best. No, just know that working with this tool is the best thing any forex trader could think of doing around the world. Now let's look at the forex market. Now this is the forex market. Remember how your mother or your father used to tell you as a kid that too much of anything is never good? Well, you might have thought that that was just maybe hard wash, and you might thought that that was just some sort of harassment. But no, I bet you trading without any of this analysis is basically very contaminating. It's just like a suicide decision, because trading without any of these instruments, trading without any of this analysis, it's just like you're telling yourself that, oh, you just do what you see. You want to do what pleases you, what you see with your eyes, and not what the market wants you to do, and not what the market does. There are principles to which the market works with. Anytime you go against the market's principle, it shows you what makes it the market. So in order for you to get a complete knowledge, complete basic knowledge on what forex is all about, and that is why we brought this course. Now we're offering 100% training on how to become very powerful in your forex trading career. But then I want to repeat this again: if you've not subscribed to our channel, please do well to subscribe, as to wait for other courses that will be coming ahead of time. Remember, this is just the third stage of what we're supposed to be showing you. We have multiple stages, so we have multiple subjects that we are supposed to be treating. I want you guys to know that I love you. Until we meet again, happy trading.